Warband. All summer, this market begged for lower rates. It priced the cuts. It leaned on the dream. It built its whole book on a Federal Reserve that would finally blink. This morning, that dream is ash. The Fed has turned hawkish. Oil has punched past $100, and the crowd is bracing for a hike it swore would never come. And into the teeth of that storm, the scarce coin turned green. This is Friday, July 24th, 2026. Here is what the night changed. Start with the anchor. As of just past 5 o'clock Eastern, Bitcoin trades at 65,200, off about 0.75% on the day, holding the mid-60,000s. And the freshest mark this morning is not the price. It is the trend beneath it. At 4 o'clock this morning, Eastern, our read of the InvestAnswers Decision Support System flipped Bitcoin's optimized trend back to green. Red at midnight, green by dawn. Now mark where that green stands, because that is the whole story. Our engine reads a hard asset regime this morning, and only two names still carry the standard across the entire board. Gold, the ancient one, and Bitcoin, the young one. Behind them, everything that lives on yield or leverage is bleeding. The broad market, the Nasdaq, the long bond, sinking together. Even Bitcoin's own kin, Ethereum, Solana, the coin proxy stocks, trail behind in the red. That is the part to sit with. This morning, the coin did not merely lead the pack. It broke ranks with its own herd and took its place beside the oldest money on earth. Two survivors, and the whole soft tape red behind them. The levels are tight. Bitcoin bottomed near 58,000 3 weeks ago and ran 16% to touch 67,000 on Tuesday, its best month since January, before the climb ran out of breath on thin summer air. 68,000 above is the wall, the average price of every soul who bought the last 5 months. 62,000 is the floor beneath. Between them it coils. Now to the storm itself, because it is the largest thing that moved this week. For months, this market ran on one prayer, that the Fed was finished, that cuts were coming, that easy money returned by autumn. This week, that prayer was torn up. Iran-aligned forces struck 2 Saudi oil tankers in the Red Sea, widening the war beyond the strait, and Brent crude punched past $100 a barrel for the first time since May. An oil shock, landing on a Fed already staring at inflation, stuck near 3.5%, and the market repriced in one violent lurch. The odds of a rate hike by September rocketed toward 80%, up from barely 50 a week ago. Not a cut, a hike. The new chair, Kevin Warsh, in only his second meeting, has already vowed what he calls a regime change against inflation. Zero tolerance, whatever the cost. The paper took the blow on Thursday. The Nasdaq fell better than 2%. The broad market, more than 1%. Even gold, the other hard leader, flinched, down nearly 2% as the dollar caught a hawkish bid. Bitcoin did not flinch. It held the mid-60s and turned its trend green. Sit with that. The rate cut dream the entire risk trade leaned on just died, and the one asset that was supposed to die with it stood up instead. Robert E. Howard, the father of Conan, once wrote that civilization is unnatural, a mere whim of circumstance, and that barbarism must always ultimately triumph. The Fed is that whim, a chair, a committee, a vote that can reverse by autumn. 21 million coins is the barbarism beneath it, hard, unmoving, summoned by no council and revoked by none. No chair, no committee, no ceremony. It does not wait on a press conference. It does not answer to a dot plot. Jordi Visser of 22V Research put the frame on it this month in an essay he titled Unlearning the Fed. His argument is sharp. Stop trading this coin on the next rate print. Its real story is no longer the meeting. It is deficits that will not close. It is human labor being eaten by machines. It is an economy of autonomous agents that will need money no bank can freeze. The Fed can hike into an oil shock. It cannot print scarcity. They meet Tuesday and Wednesday. The crowd still bets they hold their fire. So watch the words, not the number, because the hikes it swore would never come have moved from fantasy to base case for the fall, from the money to the machines, and a deal that tells you exactly where the real capital is flowing. On Wednesday, the chipmaker Advanced Micro Devices said it will pour up to $5 billion into Anthropic, the artificial intelligence lab behind the Claude models, and in the same breath, Anthropic committed to buy tens of billions of dollars of that chipmaker's silicon, deploying 2 full gigawatts of it, the first gigawatt live by early 2027. Read what that structure truly is. The chipmaker buys a stake in its own customer, so the customer can turn and buy the chipmaker's chips. NVIDIA has run the same play for a year. A 9% stake in one cloud builder disclosed just this week, positions in 2 others before it. The men who sell the shovels are now funding the miners. It is a flywheel of capital, spinning faster each quarter with one purpose: to lay claim to power and silicon before the other side can. Here is why it lands for the Warband. The market shrugged the whole thing off. Advanced Micro Devices gave back most of an early pop, and NVIDIA actually rose on the day. The read being that the compute pie is growing, not that anyone lost a slice. That is the tell. 2 more gigawatts got spoken for this week, and no one blinked, because a gigawatt of power is the scarcest thing in this entire build-out. The intelligence gets cheaper every month. Another model, larger and cheaper than the last. The power to run it and the metal to build it never will. The whole artificial intelligence age is a machine for turning abundant thinking into a bidding war over scarce watts. And watch where the boldest capital in the market spent its week. While the tape bled on Thursday, Cathie Wood's ARK stepped into the wreckage and bought better than $50 million of Tesla straight into a stock the market had just gutted on its earnings reaction. She paid for it, as she has all month, by dumping Robinhood, this summer's crowded fintech darling. But look at where that rotation is truly aimed, because the destination is the message. All summer, ARK has been building SpaceX into one of the largest positions in its flagship fund, and this month, the rocket maker earned its seat in the Nasdaq 100, dragging a wave of forced passive buying in behind it. Wood is not chasing a hot number here. She is reading the same board we read. When the crowded and the soft get sold, the patient money does not flee the field. It hunts the ground that cannot be copied and cannot be diluted. A rocket company with no true rival, the crown jewel of the new space age, is exactly that ground. That is not fear buying. That is conviction, aimed at the scarce. So carry this into the day, Warband. The Fed turned hawkish, and the rate cut dream died, and Bitcoin turned green into the teeth of it. The chipmakers are financing their own demand to corner the world's scarce power. The smartest capital in the room is rotating out of the crowd and into the uncopyable. Respect the coil, 68,000 above, 62 below, and do not chase the candle into a Fed week. One last thing, the quiet one that outlasts them all. Yesterday, the titans of this space, Strategy, BlackRock, Coinbase, and more, pulled $15 million to fund the defense of Bitcoin's own code against the coming quantum age. The network is not standing still. It is hardening itself for a war a decade out. That is what conviction looks like when it thinks in decades. This is Warband as a service. Viking intelligence delivered in real time. I am Ragnar, the HODLBARBARIan. Stand armored, stack relentless. Let the weak hands feed the fire. Skål.